ThorChain has exploded to the upside just as we anticipated a few weeks ago, but is now the right time to jump on the bandwagon, or should you be looking to take short-term profits before a potential pullback before the next move? Well, that's what we're going to look at today. ThorChain Powerhouse Project. So like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to only focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So with ThorChain, aka RUNE, we did a video on the 11th of March. We said ThorChain, buy at the bottom, sell at the top, best crypto strategy revealed. And the real secret that we were really referring to, and that you want to really know about in advance, is markets tend to move in 5s and 3s and then replicate. It expands and it contracts. That's what it's always doing based on the human psychology of buying and selling behavior. And what we saw as a pattern, if you look here in the video, was a 1, 2, 3, 4, 5 for a wave 1. And we call this an A, B, C of a wave 2. And we anticipate a big movement to the upside. And it looks like ThorChain has started that movement really clean, really clear. So let's dive into the chart right now. And look at this. Perfect. So when we look at this, now, this movement here, this movement to the upside is a clear indication. It's a bigger move than any other previous move to the upside, which is a signal of an overbalance of price. And then this gives it a very high probability that this will hold as a wave 2 low and will go on to do what we saw in the YouTube video, this. And if you want to learn how to read the market so you're 2 steps ahead rather than 2 steps behind, exactly as we covered on March 11th, and it's literally unfolded exactly as anticipated. Now, we can only do probabilities and never certainties, but learn through my free Elliott Wave and Fibonacci Masterclass, which is in the description link below. What you'll see is you'll go onto this page, click on the link, and then you'll get instant access to the Masterclass, Elliott Wave and Fibonacci Masterclass, how to read the markets like a pro. But what we're going to focus on today is now that, because we did the video when the market was around here, around $5, and it's doubled in price. And a lot of people who are behind the market, 2 steps behind, are buying right now, but often this is the worst time to be buying, and we're going to say why. Now, keep in mind, we can only do probabilities and never certainties. So first thing I like to look at is momentum. So I'm going to jump into a weekly chart. I keep that in the top left. And this fast weekly indicator is now bearish, meaning that it's overbought, and the momentum is against us. The momentum should be on the downside. So, and there's a couple of indicators, but this one of them that gives us a clue that the upside movement should be limited. But momentum is not the most powerful thing. What's one of the most powerful things is pattern. So as we saw over here, and this is the concept I want you to understand today, is when we're talking about 5s and 3s, so we saw this market here moving a 1, 2, 3, 4, 5 wave pattern to the upside, and then a 3 wave correction. Now we're going to zoom in on more of a micro wave count, because we're going to go, we've got a macro, I'm going to talk about that, we've got an intermediate, and then we've got a micro. And the micro wave counts can give us a really big clue on where we are in the intermediate, and the intermediate gives us a really big clue on where we are in the macro. And there tends to be waves within the waves. And when you're making your decisions, whether you're hodling, buying, or waiting for a better position, you can read what the market is likely to do. So you can make the best possible decision based on your personal plan, because everyone's plan is different. So this is what I want to do today. So everything still holds. We did a brilliant analysis, and it's unfolding. I say brilliant because it's unfolding as anticipated. And on a macro meaning we've got a wave 1. We've seen this, what looks like to be a wave 2, and we look like we're forming a wave 3 with price targets of $35 to $55, right? So a lot of upside movement potential. But then you've got an intermediate wave count. And what I mean by intermediate is this wave 3 over here will tend to break down into 5 waves. And it'll look something like this. 1, 2, 3, 4, something like this. It'll look like 5 waves like this. This is what we refer to as an intermediate wave count. This is an intermediate wave count. This here. There's 1, 2, 3, 4, 5. It's a degree down from the wave 3. Hopefully that's making sense, because the next part, we're going to go into the micro. You go, what's a micro? Well, this wave 1 will tend to break down into 5 waves. And this wave 2 will tend to break down into 3 waves. And this is important for today's video, and I'll tell you why. Let me just zoom back in. Because RUNE is displaying a very particular pattern over here. And if we can see this, we can see what's likely with high probability going to occur next. Keeping in mind that the weekly momentum is now overbought, so the momentum is sideways to down. That's telling us we should anticipate sideways to down for a couple of weeks, but more as a correction. So what we saw happening here, this nice movement of a wave 1 and a wave 2, we are now likely going to see on a micro count as a wave 1 and a wave 2. Very important. And I'm going to get quite precise. But again, if you're very new to Elliott waves, Fibonacci, like you don't know the 3 key rules that you must know of Elliott waves to read the markets and be ahead, take the free Elliott Wave Fibonacci Masterclass, because I break down the 3 rules in particular that gives us a massive clue. So now let's just get focused on this part of the market, this part here, this wave, potential wave 1 on a micro. So what I'm seeing, I'm just going to change it so just so it's cleaner and clearer for us to see. I'm going to zoom in like this. What I'm seeing over here, what looks like to me a very 5-wave structure. Can you see a 5-wave structure within this move over here? Well, what I'm seeing on a micro count is first move up, a retest of the low over here, an explosive move, looks like a wave 4, and it looks like a wave 5 is forming. I'm going to use the minor so it looks like this. So this is what I'm looking at. So now the momentum and the pattern is saying that we're at the end of a micro trend, right? A micro trend. So we can optimize our buying position. Is this now the best time to buy for the further upside potential movement, or should we wait for a correction, right? So I like to wait for the corrections. So we've got another clue over here. We've got this indicator over here, which is now overbought in this zone. And it looks like over the next couple of days, this blue line is going to go below the red. And this point to this point is lower. That's showing short-term weakness in buying power because the price is going up. And this is something called divergence. When the momentum is going down and the price is going up, it's indicating to us that there's weakness in the market. So we should anticipate a correction. So now we've got momentum on 2 time frames that are telling us the immediate time frame, the 1-2 weeks, especially next 3 to 5 days, is probably going to be sideways to down. The pattern is saying a 1, 2, 3, 4, 5, end of a pattern trend, and we've got divergence. So now we're going to just get a bit more confidence on this, or higher probability, or bigger edge, because what you want to do is become the casino. So when we see this very clear 5-wave pattern, this sequence over here, hopefully it's looking clear to you also. Doesn't mean it's going to, it just means it's very highly probable going to hold. We can use something called Fibonacci ratios. In the masterclass, I cover this in a lot of depth in terms of an end of wave 5 price target. For the sake of this video, I'm going to do it quite fast. There's 2 in particular that I want to really focus on. The first one is called the trend-based Fib extension. We're going to measure the beginning of wave 1 to wave 3. Again, I'll break this down in detail in the masterclass. And there's, let me just make sure I double click that correctly. We're going to measure beginning of wave 1, end of wave 3, and project it from what looks like this wave 4. And there's a couple of key ratios. The key ones is 38, 62, and 100%. Right? They're the 3 key ones. 100% is slightly just off the chart over here. Right. Just going to get rid of this one. Bang. All right, so we've got that. The next one is when wave 3, which this looks like a very clean wave 3, because this hasn't overlapped into this, very clean wave 3. When wave 3 is the clear, obvious extended wave, like the longest out of wave 1, looks like 3 and 5. Wave 5 and wave 1 tend to be very similar in price and time. So I'm just going to quickly measure wave 3, or measure wave 1 to 3. I just want to see the ratios that it actually hit, because a typical wave 3 is 1.618 to 2.618. And you can see that this particular wave 3 was nicely within this range. So it's clearly an extended wave. So what that tells me is with ThorChain, short term, we are likely going to see, and again, I'm going to use the same tool, but this time I'm going to measure wave 1. I'm going to do it over here. I'm going to do it a bit more to the right over here, just so it's cleaner and clearer for us to see. We're going to measure the wave 1 and project it forward from wave 4 low. And the two key ratios that we want to focus on is actually the 100%, that's the key one, and the 1.618, which is a typical maximum. So now this tells me with very high probability that we are reaching a micro end of wave 5 zone. So this is not a good time from a probability standpoint to buy. Now, if you're already in ThorChain, you have to make some decisions over here, right? Because we're in the art of trading, the business of trading when we're looking at the markets like this, which involves making decisions. And some are going to go, look, to be totally honest with you, I'm just hodling for the big moves. I don't really care about these short swings in between. I just want to hodl. I want the big moves, and I understand what WD again said, the big money's made in the big moves. So I don't mind if there's waves within these waves, but I'm only going to really look at selling my ThorChain if it goes beyond $35, right? And that's a particular strategy. Some might be looking to get into ThorChain. So if you're one of those looking to get into ThorChain and you're looking at the market right now, well, from my standpoint, I would personally wait for at least the next bullish reversal, but more than likely two cycles of the momentum like this. So it's almost not the next one, but the following momentum reversal. And at this one, I would look at where the pattern is. So what I'm going to look at, and we'll finish on this. And by the way, I covered this in depth in the masterclass. So if this is brand new to you, please, I would say even pause it, take the free Elliott Wave Fibonacci masterclass, learn the basics of Elliott Waves, and actually then come back to this, because then this will make a lot more sense. So what we're going to do next is, okay, let's just say this was the end of a micro wave 5. So the wave count is actually, I'm gonna write it here like this. This is how I see it in my mind. It's a wave, looks like a wave 5 of a wave 1 of a wave of a wave 3. So it's important to have that distinction so you have your thinking clear. This is a wave 1, 2, 3, 4, 5 of an initial wave 1 of the macro bigger, what we see happening as a wave 3, and is looking healthy. But it doesn't mean we shouldn't anticipate a retest of this low down here. And a retest of the low is referred to as a wave 2. So what we're going to do here is I'm just going to look at what is the potential wave 2. Wave 2 is one of the most powerful waves to identify in advance, especially if they're clean and clear. And often they are clean and clear ABC corrections similar to this. Look at this. This one here, the whole reason we did this video on March 11th, A, B, C, very, very clean. But now we're going to see, is it going to unfold on a minor level, a micro level as well? So now what I'm going to do is I'm actually going to get rid of, I'll leave these lines here. I'm going to now do a couple of things. First thing I'm going to do is a retracement. I'm going to do it a bit to the right, just so we're really, really clear, of potential wave 2s. Again, the top hasn't been confirmed, this micro top as a micro time frame, but a typical wave 2 would come down 50 to 78.6%. And there's an advanced tool called Fibonacci. Here it's called, this is TradingView, by the way, the software, trend-based fib time. And if we just measure, even if we took today's date, let's take it as tomorrow's date, most corrections are 50% of the previous move to the upside. So now we have this zone that I would anticipate a pullback coming down towards. We don't know how it's going to unfold yet, but we're just going with probabilities. And the absolute minimum time it takes should be like 38.2. So if we want to add that in, we can. And we go, okay. So that tells us I'm anticipating we should see sideways to down until the 11th. So 2 weeks, 1 to 2 weeks, 2 weeks, 11 days, 11, 12, 13, 14 days. So, and what I would anticipate is something along the lines of an initial move to the downside, a move to the upside, and then a wave C. That would be ideal. And then that would be a wave 1 and then a wave 2. And then this point down here would be a good entry point, because what tends to occur if this occurs this way, hopefully it's making sense. If you're not used to this, everything is difficult before it's easy. But again, that's why I've created the masterclass. If you wave 3 of wave 3s, so remember we're talking about 3 degrees of wave counts now. A wave 3 of wave 3 tends to be the most explosive wave, especially once it breaks this high and then breaks this high, and especially if it breaks this high, it tends to be very explosive and it can be literally vertical. We want to be aware of that. But right now, we may see from $10, $11 down to $6, give or take, $7 to $5 even, a retest in this range. Very, very important with ThorChain. So what we want to look at is probabilities. So we want momentum in our favor. So 2 weeks of that weekly momentum to go sideways to down, to become oversold. On a bullish reversal on a daily momentum, ideally with a 3-wave correction, what we're calling here a wave 2, and in the ratios of Fibonacci price. Now, because we haven't got these waves yet, we are forecasting, we're looking into the future. If they unfold this way, as they unfold, we can get more accurate information nearer the time to really, really pinpoint the low to maximize the odds. So there you have it. There you have it. So take my free Elliott Fibonacci class. Is in the link below. You'll come up to this, how to increase your income. Click on this video. I kind of give a nice intro, and there's the free Elliott Wave and Fibonacci masterclass. And again, you'll get immediate access. Just click the link, follow it. I think it's here. Yes, show me how. Register, bam, you have immediate access, and I give you some of my best top tips based on my 15 years of experience, really with currencies, trading currencies, but last 5 years really looking at crypto. And what I've realized with cryptocurrency and blockchain technology, well, crypto is going to be where it shows the price action, is it really, really follows Elliott Wave principles the best out of all markets. Because Elliott Wave principles is literally measuring human psychology, the psychological mood of the mass herd buying and selling behavior based on fear and greed. And these patterns reflect in the market. And when you can see that, you can know, right, time to take some profits, become risk-free. Time to stand aside, wait for a correction. And then other times to go, okay, movement's going up, but it hasn't hit particular ratios. So you go, no, I'm not selling too early. I'm going to ride the trend, because the trend is your friend. Ride it until its end, until it reaches its bend. So let's finish on our quote from the book, from my book. It is going to be chapter 8, one of my favorites. It's Henry Ford. It has been my observation that most people get ahead during the time that others waste. So practice, practice, practice. Practice is the mother of all skill, repetition, purposeful practice. So just learn the basic wave counts. If you can just do the basics on Elliott waves and understand the 3 key rules, that will see how the markets typically unfold and how the way, what Ralph Nelson Elliott basically figured out in the 1800s and 1900s with all markets, and they still apply today. So like, subscribe, hit the bell notification, and I'll see you very soon.